Last year, Apple and Tesla split their shares, and they've seen a big price run up since then. And so I'm getting a lot of questions is, hey, if a company splits its shares, should we be buying in? Is that a good investment opportunity? And so I'll answer that. I'll also answer if does the share price, like if it's $200, $300, is that too expensive? Is that should we be buying shares only at $20? Is that a better way to go? And so really when a company splits its shares, it's like taking a $20 bill and turning it into 4 5s. You're not getting any more money, it's just lesser denominations. So that might be valuable, not on a 20, but if you had like say a $1,000 bill and you wanted to go spend it, it'd be difficult to do that and you'd get a whole bunch of change. So it might be beneficial for you to split that $1,000 bill up into 20s, then you can go and spend a 20, and that's called liquidity. And so it does add a slight more bit of liquidity to the market when a company splits its shares. It's also been proven, there's been statistical studies done that companies' rate of return might be slightly higher than if they didn't split their shares. Now, I don't think that you should be going out and buying a company because it split its shares and that's going to be great growth potential going forward. It's just saying averaging out all the stock splits over the years, that's what they've come up with. There is a cost to the company, and so it's not free. And so one investor, a very famous investor, doesn't believe in stock splits. He thinks it's just a waste of time. Really, a company's earnings and growth and management is really going to determine what their share price is long term. And that investor is Warren Buffett. And so he's never split his Berkshire Hathaway shares. They're trading at $416,000 US. Now you say, hey, if someone wanted to sell one of those shares, that'd be difficult. He understood that. He issued some B shares that were trading at a 30th of that value. It's actually created a bit of a problem for Warren because the NASDAQ has a limit of share price of like what the value is, like 427,000 is as high as the NASDAQ can handle. I think they've worked that out. Today, you can buy one share, you can buy fractional shares. Institutional investors trade in lots or $100 shares and 100 share increments, so 100, 200, 300. And retail investors often trade in odd lots, so 133. And so there is there was once upon a time a study that, whatever the number of odd lot traders are doing, that's retail investors, and we should be doing the opposite of them. And so that at one time was a trading strategy that's probably not valid anymore. Like there's no study that recently that's a valid one. And we'll talk about reverse splits as well. So sometimes a company's share price has just gotten really beat up. It's in the pennies. And what will happen is an exchange won't keep them listed. And so they'll boot them off if they're not a certain share price. Also, a lot of investors don't like to invest in penny stocks, but if a stock's $5, hey, we'll invest in it. So they might do like a 10 for 1. So you give us 10 of your shares, we'll give you 1 of the new ones back. Same thing with, the $20 bills. You're giving somebody 4 5s, they're giving you 20 back, that type of thing. That can be beneficial because it appeals to more investors. It doesn't get delisted off the exchange, but once again, there's a cost for that. And let's just talk about the share price. So if a share price is at $200, does that mean that, hey, that company's not going to grow as much as, say, a company that's at $20? It doesn't matter. Once again, earnings, management, industry, that's all going to be way more important than the share price. So don't be afraid to invest in a company that's trading at $200, and don't go out and invest in a company that's at $20. Also, because a stock has split, so they've turned your 100 shares into 200 shares, but half the value, that doesn't mean it's going to have huge growth going forward. I hope you liked that video. If you're a client of mine, please feel free to share it with a friend or family member that you think would benefit. And if you're not a client of mine, I'd love to connect with you. You can reach me on Instagram, Facebook, and LinkedIn. Have a great day.